but they've never seen. Yes, she had eyes like the moon. Would I have been on a silver screen before the mess I'm on soon? She went. Indigo up in heaven today. Bombs going boom, 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 boom. She said, I wanna know when I can go back and get drunk with my friends. I wanna know when I can go back and be young again. Baba would go where the flowers grow, almond and peach trees in bloom. And he would know just when I want to so golden and opportune. He went. Tulips the color of honey today. It's true, bombs going boom, 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 boom. He said, oh, I wanna know when I can go back and get drunk with my friends. I wanna know when I can go back and be young again. Cherubim, seraphim soon come singing a song by the light of the moon. Oh, I wanna know when I can go back and get drunk with my friends. I wanna know when I can go back and feel home again. I guess we'll be raised on a road. I wanna be with you till the world ends. I wanna be with you till the whole world ends.
Hello and welcome to this really important webinar on Making Tax Digital hosted by Intuit QuickBooks. Now, I'm sure many of you will be aware that there's changes ahead on the Making Tax Digital program. Come April this year, those who are registered for VAT but are below the VAT threshold will have to file their tax returns using HMRC recognized MTD for VAT software. There's also a change to the penalty regime, so loads to discuss in this webinar today. At QuickBooks, we want to make sure that you're well prepared for the changes, but also be well positioned to maximize the opportunities that these changes can present. To help your practice be ready for the second phase of MTD for VAT, I'm delighted that today we have been joined by Govinda, Alex, and Cameron from HMRC's Making Tax Digital team to take us through the changes step by step. I'm Rob Burleson, Director of Corporate Affairs here at Intuit QuickBooks, and I'll host today's webinar. I'm sure some of you probably joined our webinars in the past. For those of you that haven't, the format will be the same. So we'll hand over shortly to HMRC to give a presentation on the changes that are coming in very, very soon. I'll then follow that by a question and answer session. If you haven't submitted any questions yet, you will see a Q&A icon at the bottom of your Zoom screen. Just open that up, put your question in, send it over to us, and we have a team standing by to make sure that I can ask as many questions as we can in the time that we have allotted. And also, just to save those first few questions, a copy of this presentation will be made available to you. We'll also record this presentation and we'll put it up on our website. It may take a little bit for us to get it up on the website, but we'll send you a link in an email when it does go live. And just before I hand over to HMRC to kick off on the presentation, I'd like to mention that we have our QuickBooks Connect, our flagship event, only around the corner. It'll be on the 9th and 10th of March this year. It's a free online event for accountants and small businesses to really see what's happening in terms of from the policy landscape, but also tips and tricks on how to power your next, as we're calling it, as you look to sort of go out from the pandemic. We're delighted also that HMRC will join us at QuickBooks Connect. So if you haven't registered, one of my colleagues will put the link to QuickBooks Connect in the chat function, and you can take a look at what we've got on. Really hope to see you all there. But on that note, and without further ado, can I hand it over to Govinda to take us through HMRC's presentation. Govinda, the floor or perhaps the screen is yours.
Thank you, Rob. Thank you for inviting us to give this update. So hello, everybody. I'm Govinda Sambi. I'm working in the MTD programme, and I'm going to share some details with you about what's happening in VAT. And with me, I'm going to be drawing on the experience of my colleague Cameron Cardry, who's from the policy team, and also Alexandra Lang, or Alex, from the penalty reform team. So during the presentation, I will hand over certain parts of the presentation to them, so I hope you don't mind, but they can give you some real good insight and in-depth understanding about what's going on in those areas. So to kick off, I will turn off my camera just while I'm presenting and then come back to you all. So thank you. If we can move on to the next slide, please. Okay, so why are HMRC doing Making Tax Digital, or MTD as we call it? It's an important, the UK's vibrant and diverse array of businesses and landlords benefit from and are not left behind by the changes being brought about by digitalisation, which is rippling through the business community. We are trying to build a trusted modern tax administration system that works closer to real-time systems that help people get their tax right for the first time, making it harder to bend or break the rules, and to build trust by operating in a fair and even-handed way. So MTD is playing a role in this by making fundamental changes to the way the tax system works, transforming tax administration so that it's more effective, more efficient, easier for taxpayers to get their tax right. Next slide, please. So what's changing in MTD? So to achieve this transformation, VAT taxpayers will be using MTD compatible software to keep digital records, prepare the VAT return, send and receive information to HMRC from API enabled software. And we'll cover each of these points in more detail as we go through the presentation. Next slide, please. Thanks. So what isn't changing in MTD for VAT? So the things that you are all used to using and doing are the 9-box VAT return frequency and payment deadlines, the eligibility for VAT special schemes, and most other VAT rules. Next slide, please. So what are the benefits? So keeping records digitally means it's easier and it reduces the misplacement of paper records and receipts, etc. So that's one of the fundamental changes. Remote access to cloud-based records, and this enables access anywhere and on any device to your records. There's better cash flow management and forward planning through the end of year tax estimations, and we'll go through that in a little bit later, and improved staff digital capability, and this builds resilience in coping with future events like we have had to through the pandemic. Regular reviews of accounts, giving you access to current information when needed, and more accurate updates, giving confidence in getting tax right. Next slide, please. So the MTD timeline so far. So on this slide, you can see a few key milestones but I want to focus on the last three and the most recent ones. So from September 2021, regulation was laid for making tax digital for income tax, starting with stating that customers will be required to submit digitally from April 2024. But the one that we're talking about today is the one that was announced or starting from April 2022. And as Rob mentioned, that all remaining VAT registered businesses, regardless of taxable turnover, must sign up to MTD, affecting accounting periods that start on or after April the 1st, 2022. And then moving forward, just as a highlight for future events, in April 2024, all unincorporated or self-employed businesses and landlords with an annual business or property income over £10,000 must sign up to MTD for income tax. So the emphasis today on today's presentation is really about what's happening in April, in just a couple of months' time. So let's go through what that means. Next slide, please. So first of all, you probably need to want to find out more about it, and we have lots of information on our gov.uk websites. So as you can see here, this is just a screenshot of some of the pages that you will come through when you're searching for some information. So that's just a demonstration of that. So next slide, please. Okay. So I mentioned earlier about some of the tax rules and how some of these are changing for MTD, and it's on this page on gov.uk that you can find out more about these in more detail. So that's reference to the VAT notice 700/22. Next slide, please. So just going over some of the progress to date. So these are some of the key indicators that we have so far. So nearly 90% of all businesses mandated to join MTD for VAT have signed up to MTD services. We have had over 8 million VAT returns successfully submitted through the MTD service, and that's demonstrating its functionality and durability, that it's a trusted system. About half of existing software products in MTD for VAT have seen subscribers upgraded to MTD for free, where they have been using the latest version. So there are over 1.5 million signups for MTD for VAT, showing that the sign-up process is working. And over 44% of non-mandated businesses have signed up to submit MTD VAT returns voluntarily, and they are experiencing the benefits that MTD brings. There is a wide variety, currently over 500 of MTD for VAT software products on offer for businesses, and that's grown really fast over the last few years. So businesses can use bridging software products and continue to use spreadsheets or older software products to meet MTD requirements. Thanks. Next slide, please. The changes to record keeping behaviour. So MTD evaluation has been undertaken, and an independent research report by IFF Research has been published on gov.uk. It's called Impact of Making Tax Digital for VAT, and shows many positive outcomes, including changes to record keeping behaviour amongst the MTD VAT population. So these are just some of the highlights for that. The proportion of businesses using software and or apps in record keeping has increased from 72% of businesses prior to the introduction of MTD to 87% currently, and that's growing. And then the other one is that MTD appears to have had an impact on business record keeping frequency, and the proportion of businesses updating their records on a continuous basis has increased since MTD introduction from 38 to 48%, with nearly all businesses, that's 97%, updating their VAT records at least once a quarter, and that's up from 95%. The majority of businesses found the process of transitioning to submitting via MTD easy. The next slide, please. So, whilst there are many free products available in the MTD for VAT market, there is an anticipated cost to some businesses. Nearly all businesses, 93%, carried out at least one activity prior to prepare, for MTD, with just over half, at 55% of all businesses reporting financial cost as a result of their activities. Just over a quarter, at 27% of businesses that use software prior to MTD paid more for their current software than previously. And of the businesses that were using agents prior to MTD, 20% stated that they currently use the agent more, which is equivalent to 13% of all businesses. Next slide, please. Continue with some of the benefits of MTD. So, oh, have I already done this slide? I'll read it anyway. So almost 7 of 10, which equates to 69% of businesses, have experienced at least one benefit from MTD. Most common of these are using fully compatible software, and also record keeping since MTD introduction was increased by 80%. And those that have submitted more than 7 returns via MTD at 76%, and also businesses with an annual turnover exceeding £250,000, which equates to 71%. The most common benefit reported were the MTD made preparing and submitting VAT returns faster, so that was 55%, and that it made businesses feel more confident that they were getting their tax right, so that's an increase of up to 53%. 2/3, which was 67% of businesses, also noted that at least one way that they thought MTD had reduced the potential for mistakes. Thank you. Next slide, please. So the benefits of VAT. So 1 in 3, that's 31%, businesses reported that spending less time in the record keeping and tax returns since MTD, and that increased to 35% of businesses using fully compatible software. So also 1 in 3, 30% businesses felt that the benefits of MTD outweighed the costs and efforts associated with it, almost double the proportion that found that reverse, which was 14%. Next slide, please. So who's going to be impacted by MTD? So here's a little breakdown of the population. So we have 972,000 VAT registered businesses in total, which make up of 44% below 85,000 turnover, who have already signed up to MTD VAT voluntarily, which leaves 56% below the 85,000 turnover who are yet to sign up for MTD for VAT. So that's what we're looking at in terms of April 2022. We also have, going forward, 3.4 million non-VAT registered self-employed sole traders or landlords with a turnover of between 10k and 85k who will be required to use MTD for ITSA in April 2024. Next slide, please. And what does this mean for customers? A reminder that this means customers who sign up to Making Tax Digital for VAT will be required to use MTD compatible software to keep digital records, prepare the VAT return, send and receive information to HMRC from API enabled software. So I'm now going to hand over to my colleague Cameron. Next slide, please.
The need for MTD. So MTD, Making Tax. So the mentals of.
We're losing you a little bit, Cameron. I wonder, Govinda, if you or Alex or somebody else can continue.
Yeah, let me try that.
Lost. Yeah, thank you.
Okay, let me try that. So, digital record keeping mean in practice? So some, especially smaller businesses, will prefer to use bespoke systems. For example, a spreadsheet that means their specific business, that meets their specific business needs. So as long as the system used is at a minimum compliant with what is required for keeping digital records, as a participant of entity VAT services, these bespoke systems are acceptable. So we're talking about spreadsheets, etc. So
Hello,
as long
can
as
you hear
they-
me?
Oh, hello, Cameron. Yes,
Sorry,
please.
I'm so sorry. It's just the signal kept on cutting out. Okay, so I
All
beg your
good?
pardon. Let's try again, shall we? Okay, have you
Go
got
for
much
it.
far with the slide, or have you still at the beginning stages?
I'm still at the beginning. I've just
Okay,
covered slide
so,
16.
Let's start again. So one of the fundamentals of a big apologies to everyone for that, for the signal issue. One of the fundamentals of making tax digital is digital record keeping. It's one of the core requirements of making tax digital, as well as using functional compatible software to keep your digital records. And we'll come back to functional compatible software in a moment. But so what does digital record keeping mean? It actually means it simply means keeping your records electronically in functional compatible software. Again, we'll come back to that point in a moment. So it's now functional compatible software has various guises. Some of it's spreadsheet based, some of it's accounting software, some of it uses bridging software, but it is basically some of them are bespoke systems, IT systems. So as long as the system is compliant with the making tax digital needs are for that software, it counts. What are those needs? Those needs are that software must be able to take the data that you put into it and use it to calculate a 9-box return and send that data to HMRC via an application programming interface.
You want to move the slides?
Yeah.
Sorry
Can you move
to
on?
interrupt.
Yes.
Yeah.
Thank you. Move the slide on. Thank you. Next slide. Okay, so what does that data involve? What does that data include? So that data concludes fundamentally a summary of what you see in front of you there, which is found on section 4.36 of the VAT Notice 720 now 22. So let me be clear about the VAT Notice 722. It is the guidance note where you will find near enough all that you need to know, or fundamentally need to know, about making tax digital requirements. And under section 4.3.6, you have this is the summary of all the data that should be held in your functional compatible software to calculate your 9-box return. That's what is fundamentally here. Okay, shall we move on to the next slide, please? Okay, now there are some records that you cannot, that you may want to hold electronically, but you don't have to. So, for example, I've got here on the slide invoices. A lot of customers have said, do we have to have invoices electronically? Well, the answer is, it would be good if they did. It would be, because a lot of softwares take scrape data from invoices that are scanned electronically and put them directly into accounting software. That mitigates any risks of any numbers being transposed or being typed in incorrectly. So yes, it would be good, it would be great if you could, but if you're not able to do that, then you don't have to. Then customers don't have to keep those invoices electronically at all, but they do need to be kept in accordance with the legislation in order of keeping and preserving records. Those invoices need to be kept, and they need to be kept intact for audit purposes. And there's some information like the C79 forms that need to be kept in their original form as well. So section 4.3 of the VAT notice again illustrates which records you need to keep and don't need to keep. Okay, so just one other point on digital record keeping. Obviously, you need to type in your numbers electronically. You're typing your numbers into your accounting software or whatever software package you're using. From that, and if you're using a single piece of software, then that's fine. You don't need to worry about whether that software those numbers need to be moving around. Whether those numbers need to move around other pieces of software. But if they do move around, if you do need to move between different packages of software, then that needs to be done electronically using digital links. Shall we move on to the next slide? Okay, so I mentioned quite earlier on what compatible software was, and this is just a slide illustrating that. So we've spoken about that already. Shall we move on to the next slide? Okay, now what, and I just mentioned, if you're moving information across different packages of software, then you need to do, that needs to be done electronically via what's known as digital links. Now, digital links, as I said, is just fundamentally about, it's just moving information, transferring or exchanging data electronically between software programs. That's all it is. So that can be done in several ways. And again, under section 4.2.1, we have examples of what a digital link is. So basically, if you email a spreadsheet and someone uploads that from an email, that is a digital link. If you use a portable device like a pen drive or a memory stick, you take, you take it from one computer to another and upload it. That's a digital link. XML, CV, import, export, those are digital links. So there are lists of what a digital link is defined as, and this is not an exhaustive link, this exhaustive list. If customers feel that they have found a way that does comply with the digital links requirement, then do let us know and we can have a look at that and we can see if that can qualify as a digital link. But let's be clear, there's no copying or pasting of data. You cannot cut and paste data from one place to another, from one cell to another. You can use a formula to link cells or link workbooks or link worksheets, but you cannot cut and paste. Okay, again, this is all, this information is set out under section 4.2.1 of the VAT Notice 722. Shall we move to the next slide? Okay, so again, this is, we have information on .gov.uk where you can find out a list of what compatible software products. And this is just a snapshot of that page. Shall we go to the next slide? Okay, from there, there's a menu where you got a tick box menu that you can tick requirements on, and then from that it can bring up a list of software products that are suitable for you. So finally, may I just say this? I mentioned that of course people need to type in their data in their software, and that from that point onwards it shouldn't be touched by, there shouldn't be any manual intervention to update the software, to update the numbers in any way. It should be all done electronically. And if you have more than one software product, it needs to be done using digital links. Of course, if you're all within one product, then there's nothing to be concerned about that. Now, the one area that we do allow manual input is on things like partial exemptions, because partial exemptions are acceptable adjustments that we realize not every software can handle or you can work on. So under section 4.4 of the VAT Notice 722, we have made clear how adjustments can be input into your accounting software. So basically, the total, if you're working on your partial exemptions on a separate spreadsheet, and you have a total figure at the bottom of your part of the adjustments you need to input, you can take that total number and type that into accounting software. That's the only other time you're allowed to type in the figure, apart from the very beginning when you're entering data into your accounting software. I hope that's helpful, and I'll pass you back to Govinda for now. Thank you.
Thanks, Cameron. Thank you very much for covering those points. So, okay, so we've got to the position where we're looking at choosing software, etc. So what are the next steps? So if we can move on to the next slide, please. Okay, and like Cameron, I'm also going to use some screenshots just to demonstrate exactly where you can find instructions and information to help that sign up process. So as you can see there, some information on gov.uk that Cameron's already suggested. So if you type in into the search bar there, sign up for Making Tax Digital, it will bring up all the stuff that you will need to know. And as you can see highlighted at the bottom of that screenshot, Making Tax Digital for VAT is what you would need to choose. So if we can move on to the next slide, please. So This page also references options for signing up your businesses or business, and it also your client if you are an agent. So that's part of your journey, your sign up journey, depending on whether you're a business or an agent. Okay, so next slide, please. And this demonstrates what that would look like, what that journey would look like. And as you can see in the middle of the page there's different ways to sign up if you're an agent. So that's what you would choose if that was relevant to you after you'd made particular checks about your taxable turnover, etc. So moving on to the next slide, please. So how do you sign up for MTD for VAT? So again, if you do a Google search, it will give you some instructions, but they are all linked to the guidance and the different pages that you'll access on gov.uk for MTD for VAT. So again, it shows you what you need to do, and at the bottom it starts suggesting when you need to sign up. So moving on to the next slide, please, from that. Okay, so this gives you a few instructions of when to sign up that we saw in the previous slide. So there's some things to do and avoid on this page, so you can follow those instructions. Next page, please. I will race through these. Okay, so here, these pages outline the guidance to go through the sign up process. It's in a step-by-step way, so you can go to previous pages or steps and also go to the next steps. So you can navigate your way through the process where you need more information. If you need to backtrack a bit, there's the opportunity to do that. Next slide, please. Okay, so just for convenience, what we've done is pulled those links together on this slide so that, you know, if you wanted the slide pack and you wanted to dive into there, you can do so through this. Next slide, please. So also to point out is the help and support for MTD that you can get. So here's a list of other resources that will help and support MTD understanding through videos, webinars and case studies. So there's just some of those different resources that can give you an overview of what to do, how to do it, and also, you know, what impact that has had, and especially with the case studies, it'll give you some insight as to other people's experiences. We also are running a number of webinars at the moment. So if you wanted to see how that progresses and get a deeper understanding and a visual for that, then please do sign up and join those webinars. The links can be found on gov.uk. So next slide, please. One of the most important things you need to do is authorize your software. And so it's a key point in the sign up process. The process is inherent to the software. So for instance, you know, it would be through that you actually make sure that your sign up is happening and those links are established. So that gives you an overview of that process. And I'm going to move on to the next slide now. And this slide, thank you, answers a few details about data security of software. So I'm not going to go through this particularly, but that gives you some indication of what kind of aspects we're looking for to make sure that our data is secure, that your data is secure, that it follows the industry standard protocols for authorization, protecting access to secure data. So there you go. And if we can move on to the next slide, please. So another important part of a customer's journey is how to get help. So there are various pages, etc., and there's a tab at the bottom of most of the pages where you can get help with. So just to point that out, I think a lot of people get frustrated if they're not sure what to do, but there is that function, and on all the pages that you'll see in gov.uk around what to do for making tax digital. So do use that if you need any help. Next slide, please. So there are a number of exemptions from MTD for VAT, and I'll just go quickly through these. Some businesses will be exempt for the following MTD processes, and again they're outlined in the VAT Notice 700/22, and in particular they're cited on paragraph 3. So If it's not practical for you to use digital tools to keep your business records or submit your VAT returns because of age, disability, remoteness of location, or any other reason, and you do not need to sign up for Making Tax Digital to apply for an exemption if you already have an exemption for filing VAT returns online. So that exemption will carry through to MTD. HMRC will not give an exemption purely on the basis that reasonable effort, time and cost may be involved in making the transition to MTD, but they do, however, take effort, time and costs into account in the overall assessment of whether it is practical for you to follow the rules for Making Tax Digital. So many of you may have clients that you're dealing with that you know, may be exempt, so please look out for the information here and make those considerations if you feel that they're necessary. You can actually ask for an exemption on behalf of your client if need be. You will need to provide the evidence as well to support that process, and you can do that through our online helpline. Sorry. So moving on to the next slide, please. Just quickly going over some of the compliance issues around MTD. So HMRC ensures that VAT is correctly declared and paid, and compliance officers will continue to visit or make inquiries. Digital records will be reviewed and penalties for non or late payment will remain in place. We appreciate that MTD is a change and the HMRC will help encourage and support businesses to implement in MTD. So businesses generally working towards implementation but encountering delays will be treated sympathetically. So just to give you some kind of assurance around that, please. And the last slide for me, please. Thank you. So after all that information and step-by-step guidance, are you ready? So do you have a plan to get ready? And do you have digital records in place? Do you or your clients have digital records in place? Do you have MTD software? Is it easy for them to identify which software to use? Have you got that sorted within your own practice? And when you do, and at the appropriate time, sign up to MTD. So once you've signed up, only use MTD software to send your VAT returns. I'm now going to hand over to Alex.
Thank you very much, Kaminda. Can I have the next slide, please? And I'm really hoping everybody can hear me okay. I'm aware we have had some issues today, technical issues. If there are any problems, I do have my colleague here, Chris, who will be able to take over from me. So if anybody does have any issues, please just pop a message in on the chat on the Q&A, and hopefully Chris will be able to pick things up. So I am just coming along here to discuss in a little bit more detail changes that are coming along with regards to some of the penalties associated with VAT. Now, these penalties are not strictly part of Making Tax Digital, because customers that aren't part of Making Tax Digital will be equally impacted by this. So what is actually happening? Well, we're replacing the default surcharge with two new penalties: late submission penalties and late payment penalties. We are going to be making some changes to VAT interest as well, and I will cover that later on in the slides. And the idea behind this is to align more closely with income tax self-assessment, or what we regularly call ITSA. If you think you might have heard about these penalty systems before, please do keep paying attention, because we have had a recent change. The changes are taking effect now for our VAT customers for periods beginning on or after the 1st of January 2023. So beginning of next year. We are also making changes for our ITSA customers. Again, this will be exactly the same changes for VAT and for ITSA, but those changes are coming in later on in April 23 for mandated customers to MDT, and then for customers that are not mandated for MDT, those ITSA customers will be coming in the following year, so the 1st of April 2024. You might be wondering why we're making changes to our penalties, and particularly to the default surcharge. We were in consultation for a number of years with customers, with agents, with representative bodies around these changes. And we've designed this new system to be a lot more lenient to those that make occasional slip-ups. We're very aware that the current system didn't really accommodate people that were what some may call repeat offenders, a bit of a controversial term there, but people are consistently making late payments or filing their returns late. And for those people that had occasional mistakes and occasional slip-ups, they were being treated exactly the same way. So this new system should be a lot more lenient for those customers. We're also changing our late payment penalties so that they are getting different rates and different levels of penalty depending on how late the payment is received, making them more proportionate to the length of time the payment is outstanding. As I've said before, we're also going to be introducing a more consistent approach to VAT interest to bring it in line with our ITSA interest rules as well. Can I have the next slide, please? Thank you very much. So beginning with late submission penalties, this is for the a system we brought in effectively. I think the easiest way to understand it is very similar to getting driving license points. And this is where we're talking about those occasional mistakes not being impacted in the same way as those repeated mistakes. So what will happen is that points will accrue. Now, if you file income tax as well as VAT, those points will accrue in separate pools. So if we just focus on VAT for the time being, when customer misses a submission deadline, they receive a point for each late submission. Now, this penalty point itself does not come with any financial penalty until you meet a threshold. At that point, it's a fixed penalty of £200 that's issued, and then another £200 for subsequent late submissions. And this threshold varies depending on how frequently customers file. So you can see in the table there, customers that file quarterly, the threshold is 4 points. So when they reach 4 points, they will get the £200 penalty. And for monthly customers, it's 5 points. In case we do have any annual customers, we also have a different filing threshold for those customers in case anybody here is thinking about any ITSA customers they may have. Can we have the next slide, please? So you may be worried about accruing these points, and what if over the course of many, many years you reach that threshold, but actually it's still been very infrequent? Well, there is a way that we can get these points reset, either individually or overall. Now, the way we anticipate the vast majority of customers will be resetting their points is this beginning one here. Total points being reset to 0, completely baseline back at 0, once they have met 2 conditions. And again, this is based on filing frequency. So if you are a quarterly filer that they may have met the threshold, may not have met the threshold, but they continue to file 4 times, then their points, and they're filing correctly, they're filing on time, there are no problems with the submission actually being on time, then they'd meet condition 1. However, condition 2, we also need to ensure that all obligations that were due within the preceding 24 months have been received. And this is because we are very, very aware that we need to be encouraging positive behaviours. We want people to be able to be filing regularly if they are able to, and we don't want to be punishing people that are doing it infrequently. However, we are very aware that particularly condition 2 may be challenging for some customers. Perhaps they haven't been set up for 24 months and we wouldn't want them to miss out because of that. So individual points can also be reset as long as the customer has not met the threshold. And at that point, each individual point will automatically expire after 24 months. Now, customers will be able to appeal both the points and the penalty charges. They'll be able to do this either individually, point by point, or in one appeal against all of it. And we will also be ensuring all correspondence goes both directly to the customer and also to any agent. Can we have the next slide, please? So moving on to late payment penalties. As I said before, the idea is that the sooner you pay, the lower the penalty rate will be. And we're really trying to incentivize here. Even if you have unfortunately missed your payment deadline, there's still a benefit to paying as soon as possible. So the first penalty is based on a set percentage of the balance outstanding up to day 30. And there are 2 parts of the penalty to this. We've got the first penalty and the second. Second penalty will be calculated on amounts outstanding from day 31 until this is paid in full. And that is effectively a rolling amount. Agreeing a payment plan with HMRC can result in penalty charges being suspended under normal payment plan rules. So if you do have a customer that is having difficulty paying, they can get into contact with HMRC and we will be taking that into account. And we will always notify the customer of both of these penalties separately. Taxpayers will be able to appeal the penalty charges as appropriate as well. So as you can see on this table here, we actually have the first 15 days where there is no late payment penalty charged. Now, I regularly get questions on this about surely we're not incentivizing people to pay in that first 2 weeks, but we will be charging interest over that period. So there still is a financial incentive to pay on day 1 rather than on day 15. Day 16 to 29, again, if the customer is paying in full by that date, we will be calculating a penalty at 2% of what was outstanding at the end of day 15. Day 30, The first penalty is calculated at 2% of what was due at day 15 and 2% of what is due at day 30. For the vast majority of customers, this is going to be 4%, but we have deliberately structured this so that if customers are able to part pay earlier on, they are getting a benefit for that. Again, all of this is about incentivizing paying as soon as you can. The second penalty would be in addition to the first penalty from day 31 onwards, and that's calculated at a daily rate of 4% on APR for the duration of the outstanding balance. Can I have the next slide, please? Now, we do regularly get questions, particularly asking around a soft landing for this, and for the period for this final penalty, we do have that. So for the first year, that's the 1st of January 2023 until the 31st of December 2023, if you pay in full within 30 days, there will be no late payment penalty. You will be notified that you are late, you will still be being charged interest over that period, but we've included that for the first year. And for customers that also file for ITSA, that same 12-month period will apply from when their start dates are. And again, taxpayers will still be able to appeal the penalty charges. Can I have the next slide, please? So finally, I mentioned earlier that we're changing VAT interest rules. And again, this is something that's going to apply to all customers, regardless of whether or not they are part of MTD, as long as they are paying VAT or registered for VAT. As it stands, we have late payment interest, which is not charged on late payment for VAT returns. As I touched on, particularly with late payment penalties, we are introducing interest. Now that is calculated at a 2.5% rate plus the Bank of England base rate. So as the base rate is currently 0.25%, the LPI would be 2.75%. We are also making changes to the repayment supplement. Again, this is to bring it in line with rules we have around ITSA. And the repayment supplement as is, as I'm sure you're all aware, is 5%. Now, this is changing possibly more dramatically in that the will now become 0.5%. This is because it's calculated at the Bank of England base rate less 1% or a minimum of 0.5%. So currently, as the Bank of England base rate is 0.25%, we have to apply the minimum rate of 0.5%. And again, this is to bring this in line with ITSA customers. Now, we're very aware that there are certain customers that are going to be more impacted by this than others, and we will be taking very targeted approaches to make sure all customers are aware of this as well. Can I have the next slide, please? Fantastic. So on behalf of Govinda, Cameron and myself, thank you all very much for listening. We are available to take questions, and I will hand you all back over to Rob.
Brilliant. Thank you so much, Alex, Govinda, and Cameron. Really great presentation, super thorough. Look, I got loads of questions, so let me jump straight into it. I suggest whoever wants to answer, just unmute, come in, and we'll get through as many as we can. First question, I'm voluntarily VAT registered and use HMRC's return to file my VAT. I'm unclear which is the first return that I will have to file from QuickBooks. Is it the one at the end of March that I submit at the end of April, or the one after that?
It will be the one after that.
Yeah.
Perfect. So that quarter beginning after April.
It's 1st of April 2022 indeed.
Brilliant. Is it true that Making Tax Digital software will give HMRC access to directly interrogate bank accounts and all other records?
No. Straightforward answer, I'm afraid. No, we cannot secret squirrel into accounts. We can't do go down any telephone lines. We can't do any of that whatsoever. The API, the functional compatible software, will receive calls from HMRC in terms of, hello, the call is not, I'm going to interrogate your software. It's, hello, we're open for you. We're ready to accept your VAT return now. It's ready for you to file. That's what we mean. What we mean by API calling your software, and then your software will call HMRC to say, here it comes. So that's as far as that goes. So the answer is straightforward, no.
Excellent, thank you. One question, what is bridging software? But let me attach this to another question. Can I continue to use XML spreadsheets? And what is that process between XML spreadsheets and bridging software to be able to do it properly?
Okay, well, yes, and the answer is yes. You will be able to use Excel spreadsheets. You can continue using that. We recognize a lot of businesses use Excel, and we are not stopping that at all. In fact, that's very clear. It's quite explicitly said also in the VAT Notice 722 that you can absolutely use the Excel spreadsheet. Bridging software basically it almost puts an API attachment onto your Excel spreadsheet, so it allows information to be sent down the line to HMRC.
Okay.
And there's a list of those on the software choices page that Govinda highlighted a little earlier on. People can select, have a look at the various bridging software products on there.
Okay, excellent. Thank you. Will we still be able to do our VAT return on a cash basis rather than accrual?
The rules on how the only rules that are changing is how records are being kept and how information is being sent to HMRC. There are no other rules being changed on the VAT side whatsoever, which includes the timings, etc. So those are the only two things that you really need to change. Everything else stands as it is.
Okay, thank you. If a company has been dormant for some time, but still wants to keep the VAT number for future trading or potential future trading, does it still need to register for MTD?
That's a good question.
I would take that one away.
Yes, I think we would need to take that one away.
Okay, yeah, take it away, give us the answer, and we'll make sure whoever asked it gets the answer.
Absolutely.
Somebody else online. I assume there is no MTD exemption for small charitable organizations with regular VAT refunds.
No, charitable organizations fall under the same rules as other businesses. So, and the exemptions that are, so the answer is no to that. But the exemption section exemption requirements are set under section 3 of the VAT Notice 722, and the criteria is in there, as well as the process. So if people do want to apply for an exemption for whatever reason, then they're open to do so. But in terms of a charity and being exempt, the answer is no.
Okay, excellent.
And should I just come in on penalties on that bit
Well,
there, Rob, as well?
Please do, please do.
No problem. Sorry for interrupting there. Yeah, in terms of the late submission and late filing penalties as well, there wouldn't be an exemption for charities either. We are very aware of repayment customers, and that's why I was putting particular focus on the repayment interest there. But that in itself would not be an exemption.
Okay, excellent. In just building on that for both of you, on what basis would an exemption be granted from MTD?
Okay, that one's for me. Okay, so as I said, the criteria, etc., is all set out in the VAT Notice under section 3, and I'm happy to go through it. But just to kind of surmise it, which is probably going to be the best way forward here, because of time, etc. It's basically, if it's not practical for you to use digital tools to keep your business records or submit your VAT returns. Okay, could be reasons, such as age or disability. That's all, that's possible. If the business is subject to insolvency procedure, there's another one. Or if the business is run entirely by practicing members of a religious society or order whose beliefs are incompatible with using electronic tools or communications. So those are kind of the core reasons why an exemption would be granted. Now, if people think, if people are outside these 3 areas I've just mentioned, they still feel they may be qualify for exemption, then, as I said, the process is very much there if people still want to apply and still want to ask. But those are the core reasons, and that's set out under section 3.1 of the VAT Notice 700/22.
Okay, brilliant. Thank you, Cameron. Question 5, if invoices, sorry, it's not question 5. Question, if invoices records are uploaded, are these sent to HMRC Also, when Govinda states digital records, do we have to upload and store records digitally, or are we expected to use approved software for record keeping?
Okay, so invoice, the answer to the invoice is no. We do not require any invoice data to be sent to us. No detailed data whatsoever. So that needs to be, of course, as I said earlier, needs to be kept and preserved in line with legislation. Well, in terms of digital record keeping, that basically means entering your information onto your software and maintaining it there. That's what basically digital record keeping is.
Okay, thank you.
So not on paper, basically electronically.
Yeah. Currently, when you register for VAT, you then have to register for MTD separately. Once all VAT registered businesses are part of MTD, will the separate registration for MTD be removed?
That's a good question. Govinda, have you got an answer to that one?
I'm going to have to take that one away. I believe that the system is transferring to a seamless process for signing up to MTD if you are under the mandated groups. But where it stands at the moment, I shall come back to you.
Okay, excellent. Thank you. We'll make sure that we get the answer and circulate with everyone on the line here. We have one company that is registered for VAT but is not trading yet, so we are submitting a nil return. We use the platform on the HMRC website to do this. Is this sufficient until we start trading or not?
So could you repeat that question again? Sorry.
So we have a company that is registered for VAT but is not yet trading, so they're submitting a nil return. They currently use essentially the old platform on HMRC to submit that return. Will this be sufficient going forward until the company starts trading, or will the company still have to do MTD compatible return?
Right.
Trading.
Right. So if it's VAT registered, then they need to register with MTD.
Okay, simple. Next question. Are businesses currently filing annual VAT returns required to file quarterly returns once they become a part of the MTD program, and how will that work?
No, the MTD does not change the timings of filing VAT returns at all. So annual returns will maintain annually, quarterly, and monthly. So timings will not change because of MTD.
Okay, excellent. Thank you. Can I use, and you've already answered this, but I'll ask it again because it's come through. Can I use Excel for MTD record keeping?
Yes.
Again, reiterate, I know you went through it in the slides. What does an agent have to do to bring a client on board for making tax digital for VAT?
Okay. So Govinda, do you want to come into that?
Yeah, sure. It's there's quite a few different steps, and I can't remember them off the top of my head, but definitely in the slides there's a demonstration of what those steps will be, and there is links on gov.uk that will take an agent through that step-by-step process, but never to forget that the client must authorize the agent and the software.
Okay, yeah. Okay, great, got it. After paying a penalty, so you've incurred a penalty, you've paid the fine, do my points go back to nil and start again?
Hi, yes. No, they don't. We need to have those conditions to be met. So going back to the slides from before, there are two conditions, one of which is a period of compliance, going back 24 months. So if it was, the first time, we can't have any outstanding returns effectively. So you may have reached 4 points. You may be filing quarterly, and therefore that is your threshold. You may still have outstanding returns. We would need to have those returns to come in before you could go back to 0 points. And we would also need you to complete a period of compliance. So if you continue to file on time, then your points will reset to 0. But if you were to file late again, you would be straight back at that £200 because you're still at your points threshold. Hope that's a clear answer.
Excellent. Thank you, Alex. And while I've got you on the line, let me ask another penalty related question. HMRC just told us the new penalty regime has been delayed until next January. Does this mean that I'm late filing a VAT return this year? If I pay any VAT due on time, I will not incur a penalty. And then they also go on to say, what I also want to know is, if I file a return late this year, will it get considered when the new penalties come in?
Yeah, so two good questions there, Rob. In respect of the first, if you're late filing your VAT return this year, but you do pay the VAT due on time, you will not face a penalty. So hopefully that's quite a clear answer for that one. And the second part about whether or not your past behaviour effectively gets considered when the new penalties come in, again, a relatively straightforward one there. So we're wanting to make sure that the new penalties begin treating everybody fairly and equally. That is how we have designed the penalty regime that is coming in. And part of that is making sure that everybody can start out on the same foot. So you will not be bringing, you won't start with a number of points. Everybody will start from 0 points and go from there, regardless of their past history.
Brilliant. Thanks, Alex. Another one on penalties. Let's stay with you. Is it right that as HMRC has postponed the introduction of the new VAT penalties, we won't get a penalty if we've not got our digital links in place?
See, this is a good one, and I might have to bring Cameron in here as well, because the penalties that penalty reform is considering really for that is the default surcharge, which is becoming, as I've said, late payment and late submission penalties. So no, it's not right that HMRC postponing them means that we won't get penalties if our digital links are in place. In fact, other than a few exceptions for the requirement to keep VAT records digitally, and I think that Cameron's covered that quite well, and to ensure digital links are in place is already mandatory once you've come within the scope of MTD. So hopefully that's a clear answer. Realise it might not be. Cameron, you might want to come in and build on that slightly more, because those types of penalties aren't really my specialism.
Okay, so hello. So so the question again was, could you repeat the question just so I answered it?
Okay, yeah, let me scrub through my questions. Is it right that as HMRC has postponed the introduction of the new VAT penalties, we won't get a penalty if we've not got our digital links in place?
Right, they're two separate things altogether, just like Alex said. The penalty reform is something completely different. Digital links, penalty reform is to do with a late filing of penalties. Digital links to do with the movement of information across different software packages whilst calculating your VAT return. So they're two separate things altogether. So there isn't, they should be conflated at all. Does that make sense?
Okay, yeah. So VAT penalties has been pushed, but you still need to make sure that you have digital links in place.
Absolutely. Digital links should be in place from the 1st of April 2022.
Perfect. Look, final question. We're out of time. Does my company need to follow Making Tax Digital if they're not VAT registered?
No, because it's only for VAT registered businesses.
As things stand at the moment. Exactly. Look, thank you.
Sorry, one last thing, if I may. I'd like to point people towards Section 8 of the VAT Notice 722, which provides 10 examples of how software can be set up and how you can become digital link compliant as well. So I just want to bring up Section 8 of the VAT Notice.
Brilliant. Good shout. Thanks so much for that. Look, thank you to all of our team from HMRC, Govinda, Cameron, Alex. Thank you so much for your thorough presentation and answering all those questions that I threw at you pretty quickly at the end there. Thanks so much. But look, most importantly, thanks to everybody else for joining and making this such a great session. Thanks for your engagement with all of the questions. I hope you found it useful. Please do give us your feedback. And if there's anything top of mind, let us know. We try to tailor these webinars to make sure that we're dealing with what you're thinking about at the moment. So we're all ears. And look, finally, again, QuickBooks Connect, March the 9th and 10th. We really hope you're there, and we look forward to spending 2 fantastic days with some incredible speakers with you. So on that note, everybody take care. Very much look forward to talking to you in the future. Bye.